Good morning. Today I'm going to be talking to you about Singapore, democracy, and economic growth. Let me begin by clarifying that this is not a political video or a symposium on politics. It's an analysis of three unique factors. One, a specific country, Singapore. Two, a specific conception and application of democracy in that particular country. And three, economic growth as it pertains to Singapore. What I hope you'll be able to take away from this video is a more nuanced understanding of how these three vectors from trigonometry that's going to be quite important for us to understand and to manage in order to have success in future decades. Let me begin by talking a little bit about Singapore. And to do that, I have a slideshow. Now, in this particular slideshow, what you will see is some of the data is laggy. And it's laggy for a very important reason. Because as a management consultancy, we sell our most up-to-date analysis and projections to our clients. But I think we've put enough data into this particular presentation to give you an indicative sense as well as evidence of the points that I'll be making. Let's see with some of the facts. Singapore is a young country. It is only 55 years old. It's also very heterogeneous and has a very small local population of 3.47 million. The total population is close to 6 million if you include foreigners. We're also an economy that is 75% trade weighted, which means that what happens to the larger consuming economies such as China, Japan, South Korea, European Union, United Kingdom, United States, matters much more to us than anything we do matters to them. We have one of the world's highest per capita GDP. But we also have one of the lowest wage share per GDP amongst advanced economies, about 43 to 46%. What that means is the greater proportion of the value of GDP is captured as corporate profits or in government taxation. And that's one of the reasons for which is that we have very low corporate taxation in Singapore. Now, it's important to know that only 30% of Singapore residents, citizens and permanent residents, work in MNCs. Those who do can call upon internationalized compensation rates, as opposed to the 70% who work in SMEs, who can only call upon local or domestic wage rates. And that's an important dichotomy to understand, because it contributes to us having one of the highest income inequality measures in the world. But we also have high wealth inequality. But when it comes to income inequality, our Gini coefficient was 0.452 in 2019, and after special government transfers, it was lower at 0.398. I'm showing you these numbers because I expect them to increase dramatically in 2020 and 2021 due to the effects of the economic contraction and, I believe, also a financial crisis. As I mentioned, we also have one of the highest wealth inequalities. And the reason for that is that the wealthy in Singapore derive most of their income from investments, which is untaxed because we don't have capital gains. But the middle class and the low income draw their income primarily from salaries, which are taxed to direct taxation. But of course, both the rich and the middle class and low income are taxed by indirect taxation, referred to as GST. The rich also tend to have multi-stream income for investments both locally as well as overseas, and they may also have jobs. Whereas the middle class and the low income tend to have a mono income stream, which is their salaries. So they're highly vulnerable to economic shocks if they were to lose their jobs or become underemployed or have to take pay cuts. Now, this is a longitudinal chart that shows the relationship between economic performance at the world level, the regional level, the Singapore level, as well as interest rates. Now, it stops at 2019 for the reason that I explained. But as you would know, for most of you, in 2020, the Federal Reserve has reduced the Federal Reserve rates and is heading back down towards near zero. The United Kingdom last week issued sovereign bonds for the first time at a negative interest rate. What this means is that there's very little monetary policy space in which to try to stimulate economic action. Governments also took on enormous sovereign debt during the 2009 to 2010 global financial crisis. And what this has done also has limited the amount of fiscal space that most governments have to undertake stimulus action to try to reignite economic activity in a post-COVID economic contraction environment. Something that's peculiar is that in Singapore, government projections of GDP growth have always tended to be overstated. In other words, the actual GDP performance was lower than what the government expected it to be. In quarter one of 2020, the government expected that the annual GDP performance for 2020 would be between -1% and -4%. As I mentioned in my previous video, our own projections are that it will be between -4% and -8%, if not -10%. This data set just shows you that from a consistent basis, they have overshot their estimates. One of the reasons for this is, of course, a certain lagginess of data. A second reason could be essentially their reluctance to induce projection-induced reality. In other words, if the government suggests that GDP levels are going to be lower, sentiment declines, and you actually get wishful thinking being fulfilled into real action. But trust me, our economists, both at the MES and at the MPI, are competent, and they're doing the best they can. It's not so easy to predict what's happening and going to happen to the Singapore GDP, largely because we're so exposed and vulnerable to international factors. What I want to show you in this particular slide is that well before COVID, the Singapore economy was already slowing down at a secular level. Total merchandise export and non-oil domestic exports, or NODEX, were both contracting sharply. Within the period of October 2018 and June 2019, total merchandise export dropped by nearly 20%, while NODEX dropped by nearly 30%. So unlike in 1997, when we went into the Asian financial crisis, starting with double-digit growth, and going into the global financial crisis with 7 to 9% growth, we are going into an economic contraction with the COVID crisis with very weak economic performance, and one that was already declining and contracting. In fact, we barely escaped having a technical recession in 2019. When we look at our NODEX sectoral distribution, you'll see that it's not particularly very diversified, and it's heavily concentrated in certain areas. What this means is it's going to be quite difficult to regenerate these activities from an export perspective unless we see strong recoveries in demand economies, and that's unlikely to happen anytime soon. What's happened since 1997 and continued through 2009 and 2010 is that Singapore's economy has increasingly become services-centered. Within the structure of the economy, SMEs make up some 48% of the economy from a contribution to GDP level. And 52% of contribution comes from MNCs, but 99% of firms are SMEs. From an employment basis, about 29% of Singapore residents are employed by MNCs, but 70% by SMEs. And SMEs are going to be the hardest hit and have the hardest time recovering. So inequality is going to get worse, and unemployment is going to be overly concentrated in the SME sector. And so are business failures. And these are hard realities that we have to face now. And this will happen despite government stimulus and support. It will be much worse without that government stimulus and support, to be sure. But it's still going to be bad. Another phenomenon of the last 20 years is there's been rising proportion of our workforce is described as PMETs, professionals, managers, engineers, and technicians. And this is a reflection about our investments in the public education system. The good thing about having a very high proportion of PMETs is that our workforce is highly skilled in the cognitive labor sectors. The downside is that they're more expensive to hire, and therefore, during a recession and contraction, more likely to be vulnerable to be made unemployed or to have to take pay cuts. And for those who are at the lower level rungs of the skill ladder within cognitive sectors, which are professional services, by the time the recovery comes around, which may be in 1 to 2 years, they may find themselves substituted not by cheaper foreign labor, but by software, artificial intelligence, and machine learning. And this is going to create a pool of structurally unemployed, highly educated people that's going to create a political and social challenge for Singapore that can only be solved if we can reskill, upgrade, retool, and redeploy them, as well as grow the economy again to create enough employment base to absorb them back into the workforce. And none of these are given. Now, the services sector's significance as a share of total GDP is nearly 65%. The good thing about the services sector is that wage levels tend to be higher, tends to be more flexible, tends to be more nimble, but it's also more sensitive to economic shocks. And so while it grows fast, it can contract fast. And this is where the vulnerability to the potential of rapid unemployment rises becomes apparent. If we look back to the global financial crisis, the financial services industry in particular was the hardest and the fastest hit, but also made the quickest recovery. This time round, following the dealing with pandemic as a public health issue and its manifestation and transformation into an economic contraction issue, we will see impacts in the financial services industry that will be equally hard and potentially equally fast. But what we will not necessarily see is equally fast recovery of the financial services sector. And this is due to a complexity of reasons, including the fact that the global recovery may be quite slow compared to how it was in 2011 and 2012. Now, when we compare manufacturing and the services sector, manufacturing is easier to downsize and then to revive. The services sector is easier to downsize, but a lot more challenging to revive. And Singapore has still a significant manufacturing sector. But whether we should continue to retain the manufacturing sector is an important question to ask. Because what kind of manufacturing we need is the right question to ask. We need manufacturing such as additive manufacturing, precision manufacturing. We need financial engineering manufacturing. What we don't need is old school manufacturing that is labor intensive and lower value added, and where our margins are low and our costs are high. The trade-off is that these kinds of sectors, which are much higher economic value added, don't require a lot of people and have very high barriers to entry in terms of skills and knowledge. And we don't necessarily have a workforce that is adequately trained to the higher enough level to be able to fit in to these sectors, to make up the difference in the unemployment losses that will occur in the sectors that are going to be contracting and potentially disappearing forever. So what can we expect in 2020? Well, as many of you know, the government has embarked on a transformation plan that started in 2017 with the Future Economic Council, or the Council of Future Economy, which is today called the Future Economy Council. And recently it established an emerging stronger and faster workforce, task force, to study how we can recover from COVID. Part of that is the Smart Nation Initiative, creation of new institutions such as the Workforce Singapore and Skills Future SG, and 23 ITMs. These are all well-intentioned and well-resourced. And for most part, they still have relevancy and will play an important contribution in our recovery. But the amount of money that we committed to the transformation efforts will have to be boosted given the amount of economic destruction that COVID will have on our economy. At FMG, we're projecting that our resident unemployment rate in the second half of the year will approach 7%, and total unemployment rate will approach 5.5%. One of the ironies of the Singapore workforce situation is that in every recession, although the government's argument has been that having a large foreign talent presence helps to insulate the Singapore workers from unemployment, the truth is that resident unemployment has always been higher than total employment rates. And these are conservative projections, which are subject to revisions as we get more data. They don't make for a pretty picture, and we should expect that any surprise will probably be on the upside rather than on the downside. Services today contribute 300 billion to our annual GDP. If we take the government's projections of a -1 to -4 economy-wide contraction and apply it simply to the services sector, which is 65% of our economy from a GDP perspective, a -1 contraction will lead to a 0.64% contraction of total GDP, while a -4 will lead to a -2.58% contraction. At FMG, we are projecting a -9% contraction in the services sectors alone, which will translate in itself to a -5.8% contraction in GDP. And this is discounting the performance of all other sectors. Those of you who watched my last video will be familiar with my reference to Clint Eastwood's Western, The Good, the Bad, and the Ugly, and how I generally present data in the reverse, the ugly, the bad, and then the good. Let me deal with the ugly first then. As I showed you earlier, the secular slowdown was already entrenched. So we're going into a recession from a weak starting point, which means that the recovery will be slow, protracted, in fits and starts, and take much longer than would be our historical experience. Volatility will also be higher due to uncertainty and irrational leadership from the United States. I think that's plain for everyone to see. There's also a lack of global coordination on public health, on economy, and financial fronts. And again, this is going to frustrate recovery at the global level. Geopolitical rivalry between the US and China is worsening, which will create more uncertainty and potential for friction that can escalate very quickly, which will shake markets and reduce investor confidence. And finally, we're entering into the silly season of the US presidential election between now and November 2020, where anything can happen. And I think where economies and financial markets and money markets are looking for certainty, predictability, and direction, they're going to find all the opposite: more uncertainty, more lack of predictability, and lack of direction. And that's going to exaggerate negative sentiment. And so, therefore, make things that could be better worse. What's the bad? The bad is that the Future Economy Council and the task teams that were behind the 23 ITMs have to go back to the drawing board because the assumptions that they made are no longer really fully relevant. They didn't price in a global pandemic, and they didn't price in the economic and financial knock-on effects. We've also had 3, and now we soon will have 4 budgets, collectively unprecedented and collectively massive by historical standards. But the effects of the stimulus will be unclear. But what is clear is we cannot have budgets at this rate of frequency and cannot have stimulus at this size on a sustained basis for over 1 to 2 years. One of the reasons why we are probably seeing 4 budgets is because in the next 10 months, we will have a general election in Singapore. And the government wants to show that it's prepared to do whatever it takes to cushion impacts on businesses, workers, and households. What's the good? Well, the good is that Singapore has a strong infrastructure base built up over decades. Technology, transportation, connectivity, public health, public education, security, utilities. We're the best in the region. We also have strong and respected institutions, including the rule of law, public administration, and governance. And we have, and I believe we will continue to have, political stability in Singapore, and that's going to be such an important validation to investors both internationally and locally. And we have natural and man-made endowments. We like to think of ourselves as not having natural resources, and that's true. But we have natural endowments in terms of our location and our deep harbor, which gives us the opportunity to have significant connectivity that we've taken advantage of through investments in aviation and maritime hubs. We also have man-made endowments through a highly educated and disciplined workforce and these institutions that I've mentioned. We're also likely to do better than our neighbors, not because they're not trying very hard, but because they face much more complex challenges in terms of demography and geography and size than we do. And so we'll have a positive halo effect. But this halo effect will largely be limited to financial services and capital-heavy investments. SMEs that happen to find themselves in the right spot and the right partnerships will benefit. But for most SMEs, it will continue to be a struggle. But because Singapore can do for its businesses what our regional neighbors will find challenging to do for theirs, we might be able to attract regional talent to come and establish businesses in Singapore to seek new and innovative ventures that create value for our economy. Let me now talk about democracy. Democracy is neither a panacea, a premise, a predicate, or a predictor of social cohesion or economic prosperity. It's an ideal, and Singapore is a functioning democracy. It may be vulnerable to the accusation of people like Farid Zakaria that it's an illiberal democracy, but it's a democracy nonetheless. And in 2020, or at least until April 2021, we have a time period in which we will see the next general election. One of the important things about any form of government is that it should deliver to its people. And no one can accuse Singapore's political system of not being able to deliver or not having delivered to its people peace, stability, and prosperity over 5.5 decades. And I think that's important to register and remember. What I think it's going to change and has to change is that we have to interpret democracy as something different than being a concentration of responsibility and accountability purely on the political government and its supporting bureaucratic apparatus of the public service. I think democracy has to be seen as a very shared phenomenon between industry and the community working together with the government. In order for us to have the critical mass and the crowdsourcing of ideas and energy to confront and overcome challenges on the scale of COVID and the geopolitical tensions that are going to be with us for the foreseeable future. So I'd like to put it to each of you, not to treat democracy as a magic solution, but as a mechanism in which your ideas and your energy and your inputs can make a difference. Not only in years of election, but every year, every day. I think what's also important is to have a very strong sense of citizen ownership for democracy. And that means being interested, being informed, and being involved. And in any way you choose, as a volunteer, as a student, as starting a business, being an employee, or just being a good neighbor. Many of our fellow citizens are going to suffer economic and financial and social trauma over the next 1 to 2 years as a result of the fallout from COVID. There will be job losses, there will be unemployment, there will be social stress in the household. Reach out to each other, strengthen our social bonds and our professional networks. Doing that is also democratic, because a democracy with a divided society is a dysfunctional situation. But a democracy with social cohesion, even with weak economic growth, is a functional democracy that is bringing benefits, even if those benefits are in intangible but very meaningful ways through social capital. The financial capital and economic capital will come again. It will take time. But social capital is something that we should pay attention to today. And I urge all of you, after watching this video, to ask yourself what you can do as a staff, an employee, as a business owner, as a friend, as a colleague, and as a neighbor to help improve the social and raise the social capital stock of the country. That's what's going to matter most. Our coming together as a people, not being divided, but being united by crisis. And also having reasonable expectation of what the government can accomplish. But having high expectations of what we can accomplish when businesses and the community work together with the government to generate ideas, to generate innovation, and to generate purpose and meaning that sees us through the darkest of nights to the brightest of dawns. And with that, I wish to stay well and stay healthy, and hope to speak to you again in the next video. Thank you for watching, and from all of us at the Future Moves Group, we wish all our Malay Muslim friends in Singapore and overseas Happy Hari Raya Adil Fitri and Eid Mubarak. May peace and prosperity and good health fall on you, your family, and your friends, and your colleagues. Thank you.